Good morning, everybody. It is Friday, December 13th, 2024. I am Mark Sebastian, your only option, and this is Option Pit Live. I'm joined by my co-hosts, one Queen of the Candles, one Duchess of Doge. On the floor, they used to just call her Queen. She is Licia J. Leslie.
Good morning.
All right, and he was not called king on the floor, but what he is known as is the Viking of volatility, the vicar of the VIX. He is the one, the only option trader I've known that could build a canoe from scratch. Andrew T. Giovinazzi.
That's true.
Andrew, welcome.
It is a surprise to me as well, I have to admit.
Yes. Can you imagine your 20-year-old self talking to your 50-year-old self being like,
no,
one day you're going to learn how to build a canoe from a tree stump?
Yeah. It would be unrecognizable, I have to say. Totally unrecognizable.
So, good morning, everybody. Welcome to Option Pit Live. Today, we're going to show you why it is the best time of the entire year to trade seasonally cheap options on large cap stocks with potentials to move 100%. But before we do that, we've got some economic data that we kind of maybe have to get over the hump on. Licia, what economic data are you kind of keeping an eye on, today through next week?
Well, let me show you. As we all know, the Fed is meeting Wednesday. There is a, excuse me, according to our CME Fed Watch tool, there is a 94.7 chance that they're going to lower by 1/4 of a point. Now, in my opinion, and as you can see, the 20-plus year Treasury bond is trading lower and has been actually since way back here, September 17th.
That was when the Fed started cutting rates.
Right, exactly. So as we know, rates go down, bonds are supposed to go higher, right? The yield goes down, the bond is supposed to go higher. But the bond traders, the bond vigilantes, they call them, are telling us we shouldn't be lowering rates. They're lowering the bond prices to get the yields to go higher. So the Fed funds rate, they lower, the Fed lowers. Switzerland is lowered, Canada is lowered, European Central Bank is lowered, China's flooding in a ton of liquidity, the whole world. And it's because they're all in debt. These governments are in huge debt. They're trying to lower rates for their debt. But as we know, this liquidity causes more inflation. So I don't know how it pans out. I don't like it. I don't trust them. And I think that we have to keep our eye on TLT.
I agree. The bond market, if there was one thing that would derail the Santa rally, it would be the bond market. So that's why I think we need to get through Wednesday before we start seeing the true nature of a Santa rally. Now, Andrew, you've been kind of studying Santa rallies and you've been kind of digging in on it. The Santa rally, you want to talk about it? Like, I think there's a lot of misconceptions on what it actually is because people think we just go straight up in December, but that's not true, correct?
Correct. So what I want to do is kind of provide some like vol context a little bit on this. So if Lewis could share my screen, hopefully, let's see what we got. It's
a little clarification. It's an orange Santa rally.
Orange Santa rally.
It is the spray tanned Santa.
Yeah, Lewis, you should see like a very ugly chart that I have. There we go. Okay, there's my to give you some contextual part for the VIX. So
Andrew, why don't you take the before you do that? Why don't you take the magnification up a couple of degrees?
Oh,
see where it says 100%.
That's a technical thing. That could
see where it says 100%. Left.
Okay.
A little right there. Why don't you take that up to like 200%?
How about that?
Yeah, perfect.
Okay. Woo! Thank you for the technical help, Mark. You're always
There you go.
all right. So
I wear many hats
this
here.
is the VIX, and you can see there's like an orange line here where the 1 is. There's an orange line here that's green. I guess I should use red lines, but anyway, and there's a line up here at the top. So basically, you have this zone 1 down here. So you can see there's basically no chart readings in zone 1, and there really is no chart readings in zone 4. So this is the VIX, and I've separated into quartiles on how the VIX trades historically. So for the Santa rally, you can also think about the VIX as how confident traders are. So since November, let's say, so you can see here, this is where my big cursor is. This is prior to the election. Election happens. That's why we calling it the Orange Santa rally, because vol fell apart. Right? Trump elected pretty much, there was no election shenanigans so far. And anyway, so volatility dropped. Then we had this Ukraine thing. And then vol here is dropping, trying to get into that zone 1, which we're going to call the high confidence area. That's volatility in the 12 handle and lower. And right now, just what Licia and Mark were saying, we haven't crossed and stayed in that like super high confidence area for VIX. You can think of VIX in the 12 handle as like high conviction. We're talking, 90 percentile, vol very low, market looking clear skies. And I have to say, we can't break through here. And I think to Licia's point, it is because of this rate thing is still not quite settled. So this gives you an idea, a contextual idea of, the Santa rally. For us to be there, we want to be right where that cursor is and dropping kind of down into here. You want to see it in that lower band to sort of give you the confidence to the end of the year. So we're close. We got this Fed thing to come over, to get over next week. But you want to be living down here in zone 1 in the 12 handle, into the end of the year. And we're not quite there yet. Now you can see we spent most of the last 3 months, prior to the election up here. So that's basically sort of door number 1 for the Santa rally. And I'm going to move real fast to here.
And Andrew, one thing I'll say is that there's a real opportunity with what's going to happen next week. Folks at home, typically, and we're just going to talk volatility. All right, we're going to ignore the markets here for a second. Typically, what do you folks think happens to the VIX leading into a Federal Reserve meeting? What happens to option prices leading into a Federal Reserve meeting, even one with high confidence, such as this one?
I could raise my hand, but then I'd get in trouble.
No, you guys can answer because you can be the people at home. But I'm seeing the answers already. What would your response be, Andrew? Or
generally you have a little lift in vol into whatever the Fed's going to say.
Right,
because there's uncertainty.
You absolutely get uncertainty. You get a raise in vol, and what I would comment is that next week, yeah, you know what? We're 95% certain about what's going to happen in December. We are uncertain about what's going to happen in January, and the further back in time you go out to March and May, you get less and less clear. And so there are reasons for volatility to go up. And so that leading the fact that this Federal Reserve meeting is right before we head into what is typically and we're going to talk about this, just turns into a vacuum of volatility, presents with a real implied volatility. Now, Andrew, you want to talk about how right now, even ahead of the Fed, options are seasonally cheap. Right. Why don't you talk about kind of what you're seeing now and where you think we're going?
Yeah, so I want to like to bring the VIX back into like some context for just SPY, right? So, and if you go back in time, the charts look like this. So you know, except for a year where there could be a Fed blow up or something, for the most part, this is the seasonal pattern. So this is, you see my big cursor here. This is implied volatility for SPY last year at this time, and implied volatility for SPY this year at this time. Notice literally, actually, we're probably a little lower now, but we're in the same area. So this is a seasonal thing that happens around the holidays. Again, because traders are interested in, again, how we'll talk a little bit more about why the Santa rally is, but you like to see the volatility confirm the rally. So the whole point of this, why do you look at vol? It confirms the rally. That's normally how it happens. When you generally have higher vol, you don't get that smooth rally. Now here's, let's looking at like a big tech stock here. This is, I believe, so this is NVIDIA, right? So NVIDIA had, NVIDIA, huge run. NVIDIA last year at this time, you could see my cursor, my big cursor here. Here's NVIDIA volatility, right? About this time, same time last year. Then notice that really flat vol, okay? NVIDIA spent the end of the year rallying, and this year, look where we are. Even though NVIDIA is kind of moving around a little bit, you're still seeing vols here at the lower end of the cycle. Again, seasonality, regardless, stock goes up, you still have the low vol seasonality. That's NVIDIA as an example.
And when we say vols, let me clarify real briefly, everybody. So the red line Andrew's looking at is a 30-day normalized implied volatility. So what it does is basically look at option prices that expire around 30 days from now, and it looks at kind of like an aggregate of calls and puts and comes up with an average. It's a kind of, this is from LiveVol Pro, which is a CIVO product. It's kind of their own version of a VIX for individual equities. And when we're talking about the word vols, that is just our word for option prices. Option prices move around because of specific functions. The one piece that is truly not derivative of anything else, right? So options are a quote unquote derivative, which means they are of something else, right? There's the stock, and the derivative of the stock is the option. The one part of its pricing that is not derivative of the stock is how the insurance value within that option. And so when we talk about vols, we're talking about the insurance value. And the lower the volatility, the vol, the cheaper it is to buy options. And it makes going long calls or long puts much more favorable. I just want to clarify that for everybody so that they know, sometimes as ex-market makers, we can talk up here, and we need to remember not everybody speaks our language. It's like,
right.
But so pay attention here. Andrew's going to now go through another stock. Again, that red line being 30-day normalized implied volatility, normalized
Right here.
Option pricing. And the top chart is the stock price.
Yep. So again, we have down here, here's Microsoft. Now, I could have showed you a list of these stocks this year.
You could show all of them. Yeah.
You're going to get the idea. You got, here's your implied volatility here. This is last year at this time. Implied volatility now. Again, very low, but here's what I wanted to get the idea of. So NVIDIA was a little bit more jaggedy. Again, NVIDIA, I guess that quantum computing thing kind of messed with NVIDIA here the last couple of days. The Google chart looks very similar to this. But even though option prices are very low, like literally zone 1 for Microsoft, the stock is up like in the last month, 30, 40 bucks, something like that, almost 10%. So even though option prices are relatively low, that doesn't mean the stocks can't go up $3, $2, like have that kind of smooth ramp up over a 2-week period of time. So what it's telling you is there's not huge put demand. And in this case, because realize how the stock is moving, since it's just kind of moving up in a sort of stair step slow area, it pulls those, it pulls implied volatilities, the red line, lower. But from a trader point of view, the opportunity is that the stocks just keep going. So the reality is you're paying a lot less for options. Like, instead of paying option prices up here, right, you're paying for option prices down here, but you're getting moves that are over a 1 to 2 week period, like pretty long. And that's kind of where we find ourselves in orange Santa land. And you're seeing this pattern emerge in many, many, many tech stocks. Today, this morning, AVGO, I think, kind of flew. How is that going to carry out for the rest of tech? Well, this year has shown us one thing, right? Stocks like to rally. But what we're trying to show you here is the prices we get to pay for those options right now toward the end of the year are very, very low relative to the move. And I think that's kind of the opportunity around the Santa rally in general, and just trading here into the end of the year. It's a fantastic opportunity, to be quite honest. But and that's where we find ourselves right now.
Yeah, and just because implied volatility is getting destroyed, right? Just because option prices are getting destroyed doesn't mean that stocks stop moving. I would share, and Licia, I'd love your opinion on this, because I keep going long and it keeps absolutely punching me in the face. But let's take for example, AMD. Lewis, you want to share my screen? AMD, leading into December 6th, last Friday. So this red line again is the cost of option prices. They were at, this is a 2-year chart. AMD leading into this last week, option prices were sitting essentially at a 2-year low. So not a 52-week low, a 104-week low. Licia, I think that's pretty inexpensive, don't you?
I did, and I was also burned on AMD calls last week.
Yeah, well,
Yeah.
we were right to buy options.
Yes, we just bought the wrong one.
We should have bought puts.
It happens.
It does happen, and that's okay. We here at Option, we're very clear about our winners and losers. This is one where we got the purchase right of option, just not the direction. And take a look what happens here. You're buying what is a 2-year low in implied volatility, and the stock drops a full 10% over the course of 4 days.
Amazing.
You can get absolute out of low vol. You can get really wild moves. Another one, and we're going to look at this one in a second, Licia, is Google, right? Look at this. I'm going to pull back up that 2-year chart. We were not on 2-year lows, but pretty darn close. And, Google had been one of the major underperformers out of the whole Mag 7, just kind of really disappointing. And look, like, vol is low. You get this nice rally, 167, just kind of slowly climbing. Before you look, it had rallied already $8 over the course of a few days. And then, nobody saw this quantum computer thing, because take a look, boom. And Andrew, I believe you did get calls right on this.
I did.
To the tune of what did you buy those calls for?
$1.
And what did you sell the call for?
$6. Some of our students actually sold them at 11.
Yeah.
Holy cow, that's fantastic.
Yeah. So you bought a call for $1 and sold it at $6. So that is what you're trying to do, and that is what these low implied volatilities allow you to do. And we're going to look at some of that here in a second. Now, how do you determine what stocks are going to go up or down? Right? Because that's the problem, right? AMD, sometimes, we were right on the buy, we were wrong on the direction. So how do you determine whether a stock is going to go up or down? And the answer for me is order flow. Big banks, they are in the know. Banks and hedge funds generally know which direction these things are going. Ahead of Google's move, we had seen some pretty aggressive Google call buying. And so I'm looking at Google, and there's an old saying. Licia, what's the old saying? When it's trading 90,
Going to 100.
Yeah.
And I think the same applies. What do you think? When it's trading 190?
Going to 2.
Going to 200.
All right. And Google has yet to break on this cycle. It has yet to break 200. And so I like it higher. But my opinion really doesn't matter. Yes, I'm educated. Yes, I've been looking at these markets forever. Yes, I generally know what way direction a stock is going to go up. But that's not enough. That's not mathematical. That's me saying, you know what? I've got 24 years of experience here. I think the stock is going to go up. Great. What I do care about is that the banks that have all the inside information. I don't mean insider information. I mean inside information. They have surveillance and scouts and 10 people researching these things. They see quantum computing announcements coming before they're announced. They're out there buying 23,000. And folks, I want you to look at this order flow here. So this is Google January 200 option, the January 200 calls. And this line right here is call volume, not volatility, volume. So how many have traded? And on Thursday, they bought 23,000 of the 200 calls. They weren't 100% buys, but and when I say they, I mean banks and hedge funds and money managers, the people on the inside. Almost all of this was one-sided purchasing of Google calls. So now we've got this order flow piece. The final step that we can use to kind of determine if we want to jump in is we can take a look at how these look on Licia's pitchforks.
Sure.
Licia, if you want to, Lou, if you want to share Licia's screen.
In Google, I would draw the line in the sand above or below 191.41. I believe this could be bull flagging here. And remember, intraday not as important as the close. You want to see it close above or below that support resistance level. And I'm deriving that by this previous high back here in July. That is a big support level there. And this very large bullish candle on Wednesday, I think we maybe hang out here a little bit. And guess what? 200 arrives on my median line right on December 27th. Right there.
All right. So, we're at support. I like it higher. I do. I think that one's going to move. All right. Here's another name that I am watching that you probably have heard of. This one is a little more short dated and does kind of take advantage of that Santa rally. This threw me back. Lewis, if you want to share my screen. Sorry, we're moving back and forth so much, Lewis, but this is in Microsoft, another big mega cap. You saw Andrew just talking about this. And the 465 calls. I'm going to take a picture of this just because I think that my options are about to disappear from yesterday. And what I want you to notice, so you got your strike, obviously. The implied volatility, that's that call mid IV, about 16.9. Not very expensive. In fact, really low. You saw on Andrew's chart. And here they are leading into the end of the year. So December 27th, a trader or traders, but primarily one big block. I can actually show you the order here. A bunch of them went up at 10:21 on Friday. Look at this. You can see the orders right here. Thousands swept. And they being banks, hedge funds, money managers, bought over 23,000 of the December 27th 465 calls, paying up to $2. That's pretty darn bullish. Last I checked, about what good 15%. What is that? 20%? No, that's not 10%. 5% of the money, give or take. So they're looking for a move. Licia, what do you see here in Microsoft?
Microsoft just closed above I would say my line in the sand is and Microsoft is 441. We popped up, and that's derived from these previous highs here. Popped up, consolidated a little under that.
Oh, Lewis, you want to share her
here.
screen? There we go. All
There's
right.
my 441, these previous highs. Consolidation, ready to pop up over the median line here, which it did yesterday. And the previous high here, which will be your next resistance, comes in at 467.67. So yeah, those 19-cent calls could go to $2.67.
I think that they're gonna make that price. I think Microsoft looks real strong, and those calls are there's a reason they're buying that many. People think these mega caps, they do have a lot of volume, but typically it's not right. Think about how widely held options are stocks like Microsoft and Apple and Nvidia are, right? Google. Think about how widely held. So a lot of times the option trading we see is derived around pension funds or banks hedging their stock ownership or managing income by selling options around their stock positions, or some sort of odd trade. We don't typically, outside of Nvidia, really see a lot of single straight call buying or straight put buying of any real magnitude in Microsoft or Google or even Amazon most of the time, because they're so widely held and there's so much hedging activity around them. So seeing the activity that I just showed you in Google and notably in Microsoft, short dated call buying in Microsoft is almost never. That shows you what I believe the banks are looking at that we are talking about this morning. Now, one more name I want to look at here is Apple. Apple, kind of a different story. The paper in Apple has been very kind of two-way, and here we go. And again, we're seeing some real kind of computers. I would say we're seeing computers fight, because I've got to. I wanted to check out open interest this morning. I'm gonna have an idea of exactly what's going on here when we open. But it is unusual to see, that much put volume in Apple. And then at the same time, and this is all December for next week, Apple on the RSI and all those charts looks very overbought. You have a lot of kind of two-way activity in Apple. And this is one where paper, when I say paper, I mean, again, banks, hedge funds, looks very confused. And I'm going to need a kind of a snapshot of the open interest, but you have some pretty impressive call buying for next Friday and some pretty impressive put trading as well. Licia, did you see anything in the charts?
Apple to me right now looks to be bull flagging right at support. So it may need to trade up to the very top of the pitchfork, 253, 254, before it's ready to roll back lower.
I know I was studying the RSI history. It anytime it gets overbought, it doesn't last there very long.
I would watch
Apple
246.
Amazing. It just blows my mind. There's like no top for the stock. Like there's no sales growth, no earnings growth. But it almost feels like they're reloading the carry trade again. Like, they're just buying more out. I don't know.
It might be that it is a risk off trade. So the rally the last few days has been a lot more concentrated. The market is becoming more and more concentrated. You look at the market; it's basically a donut. Traders want the top 8, or they want the top 8 stocks, or they want stocks that cost less than $8.
Yeah,
that's what it comes down to.
In Apple, I would watch the 245 level. If it starts to break down around that level, you could write it down to 236.
And there you have it. So last week we did a fun special called Dollar Shots. I want to kind of update everybody on where we are. We did execute 4 trades. Microsoft is in kind of can't lose position. Hood was down a little. Looks like it's gonna be pretty close to profitable today. Uber has kind of reversed. Uber was one. That one's. I'm gonna have to make some decisions here, like Monday, if it doesn't get a follow-up leg from here, and then Walmart dropped and then reversed back. So all of our trades look like they're in a lot of chop out of Walmart. All of our trades look like they're still in a position. I think we kind of need to get through the Federal Reserve, and then we're going to see the market pull higher. But Andrew and I are going to do Dollar Shots Part 2 today, along with some other fun education. And then hopefully I'll have either next week, I'm going to have either Hans or Licia, depending, for Dollar Shots Part 3. So if you've not joined Delta Strike yet, and I got to ask you, what are you doing? You get daily access to it's the only service that I kind of exclusively run every day. I am coming up with trade ideas on a daily basis using Big Money Flow, using and improving on their trade. And we're with the dollar shots and this low volatility, there's a real opportunity with the Santa Claus rally, because post-Fed, we're going to, based on the back of Big Money Flow, get into some options that are completely oversold because people are trying to get home for the holidays, and they don't want to have option positions, or the banks are going to be selling options to try and create some income while everyone's on vacation. So options get kind of oversold, and we know the market is generally going to go up, and we're going to be able to pick what stocks are going up by trading off of that Big Money Flow that I was just showing you. And I can't wait to do it. And just to kind of put things in perspective, again, we are transparent with our trading and our portfolio. You can take a look. I told you at the top of the show, missed on AMD. I had an NVIDIA. You're saying, Mark, you lost 100% on NVIDIA. This was my third roll down on NVIDIA from a short that I took. I made 76%, 70%, and then lost on the last one, which was a far cheaper investment than my other ones. So typically my last roll down is going to lose. But really nice win in NVIDIA. 131% in P-Core. Fastly. This is one where, again, we've rolled up. We're still riding it higher. 225%. 67% in Bloom Energy. I pointed out 70% in NVIDIA. 54% in ConocoPhillips. ELF Cosmetics. That stands for eyes. I learned this last week, or when I put the trade on. Stands for eyes, lips, and face. ELF
Not
Cosmetics.
your elf on the shelf?
What? It is not for the elf on the shelf. I think the elf on the shelf does use ELF Cosmetics.
Of course.
Couple little baby hedges here that went. Met Energy Transfer 146%, Reddit 85%, Energy Transfer 121%, EQT 112, Quadruple U. You've heard of the triple Q. I present you Quadruple U, 90%. Wells Fargo lost 67%. SQQ 132. That's the NASDAQ short one. Alcoa 95%. Few losers. Like I said, we're transparent. CCJ 103%. Snap minus 75. Apple 104. And I could go on.
Pretty good.
Here's the performance chart. And here's the performance chart since July. I don't think I trust the percentages. I got to be honest. I think that we still need some work on that. But if you look at this as how, I think this is more how the dollars have grown.
Yep.
But the track record's been great, and the education is great. The opportunity to work with like-minded traders. If you haven't joined, hop in. We'd love to have you. You can click the link here. It's in in the room here, or if you'd like to join for life, you can call my team 888-872-3301 and ask about the special that we have. You can also email support@optionpit.com. All right. Well, wow. Time flies when you're having fun. It's already 9:13, 8:13 Central. As we're recording this, let me get this off the screen so that we're not showing competing software. As we head into the open, futures were up more. So S&P futures were up by as much as 25. We were threatening the high was 60.85. We're currently around 60.77, up about 16 points. This is on the back of AVGO's really nice earnings last night. NASDAQ futures a little stronger, up 0.75%, up 159 points. Dow futures a little sadder. They're up 2 points. And RUT futures, Russell 2000 futures are currently down 2.8 points. VIX futures down 30 cents. What are you guys seeing into the close?
I'll go first. I will be watching 60.30. That was the low on Tuesday. And if we break below there, we'll be trading 6,000, maybe even a little lower. On the upside, 6,100, of course, is our line in the sand resistance there. I think if we break through there and we really get a rally going, we could go to 61.17. But I think overall, it's going to be a quiet inside day.
Andrew T.
Yep. I'm going to say a quiet inside day. I think this inflation report was a little, I think it's got people on their heels a little bit. So while I think the trend overall till the end of the year, I think we're going to have some noise over the next week. I don't see how we could get above 6,100 today. I actually, it's weird. I think most of this rally goes away by the end of the day. That's what I am. And I would be surprised if the sell-off in VIX remains till the end of the day. I think the morning will be the low in VIX. That's where my head is on.
The fun guys that I talk to are of your belief, Andrew. The few, talking to a few guys that will remain unnamed that are running large hedge funds. They both see weakness into the Fed. I'm with you. I think the NASDAQ will stay green. That Broadcom news is and Broadcom is the 8th largest component of the NASDAQ. It might be 7th.
Yeah.
Well, don't forget you do have Adobe's down big. I'm not sure how much that will affect anything, but Adobe is down big.
Oh yeah. Wow. Holy.
Yeah, they didn't like their earnings, as I recall.
Clearly they did not.
Yeah.
Clearly.
I don't know if it'll balance, but it adds something.
I don't. Yeah. I mean, Adobe's worth about $200 billion. Broadcom's worth about, after today, it's going to cross the 1 trillion.
Wow.
Because it's up 20%.
Another $1 trillion company.
It's going to be the latest $1 trillion company. So with Broadcom, I think it's going to be very difficult for the NASDAQ to go red. But I do think that you'll see the S&P go. Maybe it doesn't close red, but I think you'll see it turn red on the day. Yeah. All right, folks. Once again, I want you to join me and Andrew today in Dollar Shots in Delta Strike. Take advantage of what's going on at the Santa Claus rally and this true opportunity coming out of the Federal Reserve next week to trade some of these inexpensive options for, in large cap stocks for what I think are going to be some really nice profits. And again, if you're interested, so click the link. And if you're interested in joining for life, so let's say you're already a member, loving the service, but you're paying on the annual, give us a call, 888-872-3301, or shoot us an email, support@optionpit.com, and talk to Ted, see what kind of credits and vouchers he might have for you. All right, folks, it is 9:18 Eastern time. We are about to turn it into a pumpkin. Yeah. I am. So once again, great show. Programming note, we will be here next Friday. We will not be here the 27th. I think we're going to be here on the 3rd, but I'm not. Don't quote me on that, folks. So for one, Andrew T. Giovinazzi, the Viking of Volatility, Vicar of the VIX, the man who can make a canoe, and Licia J. Leslie, the Queen of the Candles, the Duchess of the Doge, or as I like to call her, just straight up, Queen. I am Mark Sebastian. I am your only option. I hope you have a great weekend and a great
have a good week, everybody.
On Friday.
Thank you.
Bye, everybody.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.